All right, Bulls and Bears, back with another dose BX4 news. Let's go ahead and get right into it. Economic bust or boom, either way. We got a loaded report for you today. A lot of financial economic news to get caught up on and more. Please make sure you're subscribed. Let's go ahead and get started right here. The economy fell by 0.2%. In other words, we saw a drop in the GDP number. What does that mean? Well, that means less borrowing. And there's several reasons for this. One is consumers are loaded up on debt. At some point, people are hitting the wall. Even though they have credit available, credit is still plenty of credit available for most people. People are choosing to be more cautious on their spending. Now, you may not notice it because everywhere you look, it looks like people are record holiday travel over the Memorial Day holiday. It doesn't look like people are really holding back on the spending. But some big ticket items they're holding back on, and we're going to talk about that here in just a little bit. But the economy fell by 0.2%, and let's go ahead and bring up a quick chart on this so you can take a look. And it may not look like a very big drop, but when you compare it to the previous increases, and these are year over year, or changes rather, in the quarterly GDP, which are looked at year over year, we see the drop there to the far right. So something to think about when you're thinking about going long in these markets. How much longer will the consumer be able to prop up this economy, which is based on mostly spending? Well, when you look at the number of people that are behind on their loans right now, especially the tens of millions of people that are delinquent now in their student loans, there's going to be a big reckoning coming up very, very soon. And I know people often hear me say this is going to happen soon, that's going to happen soon. It depends on what happens with the rescues, right? They could reverse all this and the student loans could be paused again. There could be a bunch of rescue programs implemented, kind of like 2020, right? So there's no guarantee that the economy is going to come to a screeching halt or even drop because of the way it can just be rescued and propped back up, kind of like the markets when you have the plunge team and all that holding up the stock market, for example. So you always have to take this with nothing is baked into the cake, nothing is carved in stone, so to speak. But that's okay. And I've got a few people asking me, well, we see the news you're putting out, we're listening to what you're saying, but how can we benefit from this? What should we do? What should we invest in? Folks, it's not a simple answer. It's different for everybody. If you have no savings, then don't invest in anything. First, work yourself up to getting a savings account or getting some money to invest. And even then, you may not want to invest. Even if you have, let's say, a few $1,000s put away, you need an emergency fund first before, I would say before you invest. I'm not giving anybody advice, but if it were me, I would first have a savings cushion to get you at least 6 months, right? Some people would say even more, a year. But until you get that cushion, I would say don't invest your money because there's going to be people out there investing every extra dollar they have. Then if something happens, then they're in big problems. You have a car breakdown, you have an unexpected medical bill, you twist an ankle, have to go to the hospital, whatever, car accident, God forbid, you're going to be a major situation there going on. So I don't sit here and say you should do this, you should do that. I can tell you what I would do, but my situation is different from every single person watching this, right? We bought the dip when the market sold off because of the big tariffs that were announced. We bought the dip on that. If you were on that video, then if you jumped into it at the same time I did, you're up over 20% right now, right? That's not a bad return at all. Some people park their money and keep it in a CD or whatever to get a 4 or 5% a year yield. And we're up 20% in a matter of weeks, folks. So that's the type of thing I look at. I don't invest every day, but when you see big things happen, that's when I invest. And maybe you're the same, maybe you're not. And that's why I can't give advice to each individual because everybody's different, right? Again, some people shouldn't invest at all. If you don't have any extra money, if you don't have an emergency fund, I wouldn't invest unless you feel like it's like a Hail Mary and you're in such a bad situation where you have to make money quickly and you're going to just go all in, kind of like rolling the dice or doubling down at the casino, right? I would never do that. But people do get into situations where they feel that desperate, where they feel like they've got to make money now. It's do or die. It's now or never, that type of thing. And again, I don't think anybody should do that, but people get backed into a corner, and they have to do that type of thing. But if you watch the videos, if you keep an eye on what we talk about here, you'll find opportunities to make money. And maybe you found more that even I'm not aware of, right? And I see you're down in comments sometimes. You give me some good ideas, some good investment things, strategies that you come up with, and I love reading your comments. I've actually learned from a lot of people that leave comments on this channel. But let's move on here because some very important news I wanted to cover here today as well. We just had a bit of a jump in new jobless claims. Official data shows jobless benefits applications surged by about 14,000 now to 240,000 during the week ending May 24th. So we're still at about 1 million jobless filings every month, a little bit under 1 million. All right. But we would have seen a much bigger surge in jobless claims, but now we have judges that are coming in and overriding and reversing some of the things that this administration was trying to do. They reversed some of the layoffs. They said you can't lay these people off. More recently, I just saw in the news that they reversed something else. What was it? All right, and this is crazy. This is changing from day by day, even hour to hour. I mean, look at some of these headlines here. The tariffs to remain in effect after appeals court grants stay. That's recently, but before that, the court had struck down most of the tariffs, ruling them illegal. A federal court on Wednesday froze most of the sweeping tariffs imposed by the president on virtually every foreign nation. And then we just had this come out today, just like an hour ago. The tariffs can stay in place for now, an appeals court rule. So this is on again, off again, folks. Tomorrow it could completely be different again. So this is an opportunity, folks. This is an opportunity. It's going to cause volatility. It's going to cause volatility. Like the big sell-off that we saw with those tariffs that were announced, the tariffs were paused or lowered to 30% just a couple weeks after that. So then we saw a big surge in markets, and that was a nice dip buy. Again, for people that are paying attention to this, volatility is a good time to invest here. So I'm excited about this. I mean, it's a lot of chaos. It's a lot of things to keep up with, but it also can present opportunities if you're thinking about it the right way. All right, here's something else that's up and down. Consumer confidence. Well, apparently it's back up again. Consumer confidence improves for the first time since November. Remember, after the inauguration there in November, we started seeing a lot of problems come up. They talk about the tariffs. We saw that inflation wasn't really coming back down very significantly. It's still about 2.3%, which is the lowest in several years, but it's still higher prices. So then that confidence slowly faded, slowly dropped. Consumer confidence was plunging in every report that we looked at. But this recent one says it's back up because now supposedly people aren't so concerned about the tariffs because the tariffs were dropped. But then again, it could change because they could re-implement these tariffs again and bump them up again. Who knows, right? It's been a little while since Americans had an inkling of optimism about the economy. Consumer confidence rose 12.3 points this month to a reading of 98%. So there you go. So those of you that think this is a good gauge of the economy, these surveys, these consumer confidence surveys, I really don't put a lot of weight behind these because I don't think that the people that are surveyed for these, I don't think they're looking at the right things. It's not just about tariffs, folks. We have huge underlying problems with this country. We have debt that can never be paid off. We've seen them just kick the can down the road constantly over the past few years. We no longer have a free market. There's no longer any price discovery. In other words, even if everyone's broke, prices are still elevated. That shouldn't happen, folks. When people are broke, prices should come down. But it's the banking system, it's the rescue programs, and it's all the handouts, and it's this market tampering that keep prices elevated. Prices should have come down big time in housing, in automobiles, because people simply don't have the money. But of course, it's the banking system that keeps prices elevated through people able to borrow money. And of course, you have the billionaires out there still buying up assets to make more money for themselves. And that also keeps the bubbles inflated. For example, we've got homes being built right now, not even going to be put on the market for sale for a family to buy. They're being built strictly to be rented out. They're being built strictly for a mega investment firm, a hedge fund to come in and buy them just to rent out. They're not even going to be put on the market for people. So housing inventory needs to really rise in order to see a correction, a significant correction in the housing market. Also, if you watched our previous report, we have the central bank out there basically warning that stagflation is coming. Stagflation is coming. So that's little to no economic growth, but prices remaining high and even going higher with the cost of living. Not a good thing, folks. Most people haven't even lived through that. I don't think I've ever lived through stagflation. I've read about it in history books and stuff like that, but we're going to see how that feels. And I think it's going to be much more than stagflation this year that we're going to see what happens here this year. A couple other things here to get into, folks. We have Best Buy out there cutting guidance because of the tariffs. So Best Buy, I would really be cautious about getting into retail stocks right now when you have the shrinkage with the massive theft problem, plus now the tariffs, because most of these items, especially electronics, have to be imported. Most clothing as well has to be imported. So I would be very cautious on retailers right now. There's still a few retail stocks that I hold mainly for the dividends, but as far as buying new ones, I'm not into that. I did buy a dip. I bought an index fund back when we had that big dip a few weeks ago. But individual stocks, I'm staying very cautious, staying away from them here. All right, back into the housing market real quick here. The median age of home buyers increased to 56 years old. Back in the 80s, it used to be just over 30 years old was the median age of the average home buyer, right? But now we see that it's mostly the baby boomers, mostly the older generation are the ones that are mostly able to buy the homes, right? So with the median age of 56, that means typically people in like their mid 40s up to their mid 60s are the ones buying homes because it medians out to 56. But look at this chart, folks. I mean, look how much worse can this get? I mean, is it going to be the average person is going to be 70 years old before this is done because prices just keep going so high? And then once you get up to that age, it becomes more difficult to buy a home because then you usually have a lot of health problems that take a lot of your funds away, your finances away, unfortunately. All right. So we're going to wrap this up here, folks. I mean, let me know what you think about this. A shorter report today. I've got a few things I've got to research here before I bring them to you, but that'll be tomorrow's report. Please make sure you are subscribed. Make sure and let me know what you think about this, the latest numbers, the rise in consumer confidence. I mean, what's that about? And what else did we talk about here today? All right, and also investing. What are you investing in? I'm still accumulating silver as much as possible, a little bit every couple weeks. Sometimes once a month. It depends on how much I buy because I don't want to pay for shipping for just like, I don't want to pay the shipping charge on just like 10 ounces of silver. You know, I want to wait till I can at least buy usually 20 or 30 at a minimum. Otherwise, it's not really worth the shipping, in my opinion. But that's what I'm doing, folks. Also looking for dip buy opportunities in the stock market. Digital assets, cryptos. I'm not adding to any positions right now. I'm waiting for another drop here. In fact, look at a chart here, and I'll show you why I'm waiting here real quick before we wrap up. All right, look at this chart here on Bitcoin. I think we're due for a pretty big correction. We're up about 105,000 right now. I wouldn't be buying until it pulls back to about 75,000. And remember, you don't have to put in a whole Bitcoin. You can just buy a fraction of a Bitcoin. You can bet $10 if you want. You can put in $10 on the dip if that's what you have to invest. But my point is that look at this up and down volatility. You know, I've been a buyer here on the dip. I was a buyer here 2023 in the dip. I didn't buy on this dip. I should have probably because I should have known, but it didn't dip as much as I wanted. And in this case, if it doesn't dip to 75,000, I'm not going to be getting back into cryptos. And even if I do, it's probably not going to be Bitcoin. But a lot of the other ones kind of move along with that particular one. So, you know, we'll keep an eye on here. I'll let you know what I'm doing. Trying to keep my head above water, folks, just like maybe a lot of you. Maybe not. Please let me know what you think down in the comments, everybody. Keep stacking. Bye for now. Peace.